All right, so what will the next big social networking IPO be? And are the valuations of Facebook, Twitter, and Groupon realistic or a bit wackadoodle? We're joined by a guy who knows a thing or two about wackadoodle and about software and IPOs. Mitch Kertzman from Hummer Winblad Venture Capitalist, former software executive. You've seen a few things in the IPO world. I don't think we've ever seen anything like this with these secondary valuations that we're hearing about.
Well, we've seen crazy valuations, but in the public market. Right. Now there's this new market, this secondary market, which is a little more opaque, so it's hard to really know what's going on. And it's hard to know who's paying these prices and to judge that. So, I predict that at one company, you'd probably want to pick Facebook, is probably going to be worth what people are saying it will be worth. But you can guarantee that there's going to be several that may not end up there. It's all over the web today that people are questioning whether Groupon's business is declining. Nobody really knows.
No, we talked about that last night. We also talked last night about drugstore.com, which I don't know if you remember, I think it was 99, they went public. Stock went from maybe 20 to close to 70, was taken out at 380 yesterday. And it just struck me that
that
was... Yes, by Walgreens.
That's
which,
right.
After 12 years, it couldn't get anywhere near its IPO price.
It's a great company, by the way. I buy from Drugstore as a customer. But sometimes, we were investors years ago in Pets.com. People loved Pets.com, but ultimately it was a tough economic model.
So, Mitchell, LinkedIn and Pandora recently filed for an IPO. We expect that they will be the first of a few this year. What do you think will be the big tech IPOs this year?
Well, I wish I knew. If I knew that, I would probably not be doing venture capital. I'd be doing public investing. But I think Pandora is a terrific company, very successful company. The interesting question to me is whether the IPO window is opening a little wider right now. There was a recent IPO of a company called Cornerstone On Demand, which by any measure is a pretty good company, but doesn't have quite the revenues and the profits that some other recent IPOs have had. They had a very successful IPO, and it may be an indicator that the IPO market is widening. The window is opening wider for more kinds of tech companies. But I wouldn't predict necessarily which one's going to be the hot one. Whenever Facebook gets to the market, that'll be the hot year.
So the secondary markets have certainly extended the private lifetimes of these companies. You mentioned some concern about them earlier. Do you think the secondary markets need to be better regulated?
I think there needs to be more transparency. I think that by most measures, you'd have to say that the secondary markets are offering stock, if not to the public, if to sophisticated investors, that it's hard to imagine that market couldn't benefit from a little bit more transparency, as almost all markets could benefit. And it's hard to know what kind of information the buyers are getting. The traditional reason for companies to go public years ago, when I took my company, PowerSoft, public in 1993, it was not just for liquidity, but it was a source of capital, and it was a source of relatively inexpensive capital. And these secondary markets aren't bringing any capital into these companies, so it's purely a liquidity opportunity.
What was PowerSoft? I don't remember PowerSoft. And was it an insult? I take that back. I'll never forget PowerSoft. Would you tell us a little bit about that?
Well, for a kid like you, of course you wouldn't remember it. But for an old guy like me, I was the founder and CEO of PowerSoft, the Boston company that was the leader in client-server development tools, late 80s, early 90s. We took that public in 1993 in a very successful offering. Sold it in 95, the first software sale for $1 billion in the history of the industry, to Sybase. That led to my being the CEO of Sybase. So that brought me out here from Boston to California.
And so tell me, so often we see these companies with someone as a CEO who has a different history than an investor and trying to tell that story to investors. As you went from CEO to being a venture capitalist, what's sort of the lesson that you take into venture capital that maybe other investors don't have?
Well, I describe going from CEO to venture investor as like an athlete going from player to coach, because a lot of the venture capital job is a coaching job, working with CEOs and management teams. I think
ironically, one of your partners is a former NBA All-Star. So
that's right, and a great coach.
Yes.
By the way. So The lessons, I mean, I've learned a lot of lessons in doing this. I've perhaps relearned how important CEOs are and how important managements are. You can have a great product in a terrific market, but you really need the team to execute. So I've learned perhaps more and more how important the people side of the equation is in these companies and getting great leaders.
Interesting. Let me ask you, you're invested in a bunch of companies, you're in a bunch of boards. Pick your favorite.
Well, that's like asking which of my favorite is my favorite kid.
Okay, which is your favorite kid?
They're all my favorites.
Oh, okay, all right. So tell me about some areas you're invested in.
I'm fortunate enough to be on the boards of some terrific companies. A company here in San Francisco called Flight, just rebranded from Widgetbox, which is a leader in a new form of advertising, almost applications instead of ads. It's not just rich media, but it integrates real-time content, feeds, video, etc., right on the cusp of changing display advertising.
Oh, wait, I don't understand. It's ads, but it's not ads?
Well, it's ads, except the form of the ads, they're really offering an advertising platform in the cloud. And the challenge with banner ads has been people have become ad blinds. Not only that, but when people click on an ad, it takes them somewhere else.
Right.
These ads are really mini experiences that allow the brands to more fully communicate, integrate all sorts of rich content, including real-time social content, all in an ad. And so far, the results of that in terms of engagement and ROI have been terrific. So that's a very exciting company, and internet advertising continues to be a almost limitless opportunity.
Interesting.
So, Mitchell, Corey may not remember PowerSoft, but I believe it was one of the first big software acquisitions ever. In talking about this whole idea of the appification of the internet, how do you think traditional software providers are going to survive that?
Well, I think a lot of this appification is happening at the user interface. In other words, where people interact with the software. And I think we're seeing more and more enterprise software companies that have traditionally been on so-called green screens, dumb terminals, are now putting applications and apps on iPads and iPhones and other smart devices. So I think the leading edge companies are going to follow this. But there's no doubt, I mean, when I first picked up my iPad, it changed my view of software. When you can physically interact with software by touching it and moving things around. I've been in software since 1968, and it really opened my eyes. And I think that's happening broadly through the software industry. I will say that companies that ignore that are not going to be able to survive and thrive.
So it's because of apps that companies are cheaper and cheaper to start. How is that affecting your investments? Are you making smaller and smaller investments because of that?
Well, Hummer Winblad have always been and still are primarily Series A investors. We are typically the first institutional investors who invest in a software company. And to that extent, our investments have always been in the $2 to $5 or $6 million range in a first round. So I haven't seen that change. In fact, Hummer Winblad was an investor in my company in 1991, and the investment looked fairly similar. We are seeing, however, companies that come to us having started with a little bit of angel or friends and family money to get the company off the ground and get the first products developed that might not have been the case as much in the past. So this angel market is a much more active market than there used to be.
Really quickly, when you look at your investments and you see the outsized valuations these companies are getting because they're consumer-facing internet, do you think that maybe in some way those are better businesses to invest in, if not better businesses to start, than an enterprise software company?
Well, in some ways, I feel like if you walk through a casino in Las Vegas and you hear the bell ringing on the slot machine and you see coins pouring out of it, you go, wow, putting money into slot machines must be a great investment. And the consumer internet, there are some fabulous companies and there are some huge wins, but it's a lot harder with dealing with consumer tastes to predict which ones are going to be the winners.
Mitch Kertzman, really appreciate your coming by. Thanks. We'd love to see you again.
Thanks for
coming on.